This is C 1.3.1. ABC company's equity shares is quoted in the market at 25 rupees per share currently. So P0 is 25. The company pays a dividend of rupees 2 per share. Now try to understand it is dividend, but whether it is D0 or D1, sometimes you will have to take it from the sentence which is written. Sometimes you just have to make some assumptions, whether you are assuming it as D0 or D1. The company pays, so it is already paid. I am assuming it is D0. It is 2 rupees. Shares in the investors market expects a growth rate of 6% a year. You are required to calculate company's cost of equity capital. Now try to understand, as a dividend is given, as growth rate is given, which method I will use to find out KE will be dividend growth model. The formula will be D1 upon P0 plus G. Now, what is D0? What is dividend of current year or 0th year? 0th year is today's year. Today, what is the dividend? Is 2 rupees. So, what will be dividend after 1 year? It is 2 rupees plus 6%. Alright. So, you can do it in your calculator directly, but I need to do this. 2 multiplied by 6% plus 2. That is 2.12. You can do even orally. 2.12 rupees will be D1. My answer will be 2.12 divided by P0 is 25 plus growth rate is 6% is 6. Alright. Growth rate, how to write it down? You will have to write down 0.06. Alright. I'll tell you why. Sir, can't I write down 6? Yes, you can write down 6, but in another man. I'll write down 6 in next one. But how to do it? Try to concentrate. Right now, you need to write down 0.06. It is 2.12 divided by 25 plus 6% is 0.1448. 0.1448 is equal to, now if I multiply this with 100, it is 14.48%. No sir, I want to add 6. G is 6, so I want to add 6. You can add it. Try to concentrate, but out. 2.12 divided by 25. But this answer you want percentage. Because you want to add something which is percentage, this answer should be in percentage. Then you can add 6 because 6 is percentage. If you want to convert it into real terms, you need to write down 0.06. This answer should be 14.48. Let me prove it. It is 2.12 divided by 25 multiplied by 100. Now what is this? 8.48 is percentage because I have already multiplied 100 with it. Is it correct? Plus, if something is percentage, can I add percentage in it? Yes. Is it correct? So I normally prefer this, where 6% is nothing but 0.06. Say tax rate also we have done this. If tax rate is 35%, we don't write down 35, we write down 0.35. So if the growth rate is 6%, we need to write down 0.06 and follow this. Never write down multiplied by 100. Always when you write down percentage, you need to multiply it with 100. If the anticipated growth rate is 8% per annum, calculate indicative market price. If growth rate is 8%, assumed KE as in point number 1. What was KE in point number 1? 14.48%. D1 is equal to, what was D1? 2 plus, instead of 6 it is 8%. It is a 2.16. Then calculate the indicative market price of the share. Find out P0. Started. Now you can use a time value. How to find out value of share or security in finance? It is present value of future cash flows. If it is present value of future cash flows, I can use infinite growth rate, infinite cash flow with growth. Sorry. If you don't understand this, it is nothing but cash flow of first year divided by rate of interest minus G. Is it alright? Or it is nothing but KE is equal to D1 upon P0 plus G. Here if you take P0 on this side, this will be how it will look like. It is 2.16 divided by, now this both are percentage, yes, 14.48 minus 8%. This is 2.16 divided by 6.48%. Now in your calculator you can directly do this. In this computer calculator it is not possible. 2.16 divided by 0.0648. I need to do it in this manner only. That is 33.33 rupees. It is 33.33. Sorry. What I have done in what you should do in your calculator, press 2.16 divided by 6.48 is equal to, what I have done this 2.16 divided by 0.0648. 0.0648 is nothing but 6.48%, which is nothing but 33.33. There is also a third question. If the company issues a 10% debentures of face value of rupees 100, face value 100, now it is debentures. Interest will be 100 into 10% because they are 10% debentures, that is 10 rupees. Realizes 96 per debenture, so borrowing is 96. While the debentures are redeemable after 12 years, N is 12. At a premium of 12%, redemption value is 112. What will be cost of redeemable debentures? I am not repeating the formula, but it is interest into 1 minus T, tax rate is 50%, it is given over there, plus RV 112 minus B 96 upon N, which is 12, upon 112 plus 96 upon, this is 5, this is 4 and 12, 16 divided by 12, which is 1.33. There's a 6.33 is numerator. Denominator is $104. This will be 6.33 divided by 104 multiplied by 100, that is 6.08. 6.0, which is nothing but cost of debentures. Now in equity they have asked cost of debentures. This question was asked in November 2016. So just to take this question, we have kept it as a part of cost of